Have you ever pondered what the price of Tesla stock will be following the release of the Q3 earnings? While some people think the price of Tesla stock will keep declining, others don't think so. You would not want to overlook this information. Although Tesla's third quarter revenue was record, it fell short of Wall Street's initial projections. The manufacturer of electric vehicles has faced challenges this year, including reduced supplies, increased expenses, and fewer deliveries than anticipated. Prior to continuing, Moomoo created a new role known as the industrial chain. Let's say you wish to discover which stocks might change over the next several days or months. You will greatly benefit from the industrial chain. It offers a thorough overview of the hottest sectors, such as semiconductors and electric vehicles. Finding stocks quickly, either upstream or downstream, allows you to concentrate on specific industrial segments more rapidly. Additionally, since segments and industries are related, you could forecast price changes more quickly without having to read a lot of research papers to understand the relationships inside a single industry. Description includes link. Although Tesla is quickly increasing the number of electric vehicles it produces, the company's profit margins have been stretched by expenses for additional factories in Berlin and Texas, as well as problems with battery production. The electric car manufacturer had announced in early October that it had built over 365,920 vehicles and delivered over 343,830 during the third quarter. These numbers followed that announcement. However, as the company produced almost 22,000 more vehicles than it delivered, this has given rise to rumors that it is unable to meet demand. Despite the fact that this sets a new delivery record, Q4's expectations will be significantly impacted by logistical obstacles brought on by the closure of a Chinese facility and the launch of new ones. Elon Musk reaffirmed that there was great demand for the fourth quarter on the most recent Q3 earnings call. Additionally, Tesla reported exceptional quarterly earnings of $1.05 per share, exceeding the 95 cents per share Zacks consensus forecast. This quarterly data indicates a 10.53% earnings surprise, according to a NASDAQ article. This electric vehicle manufacturer surprised investors by 24.59% with earnings of 76 cents per share a quarter ago, exceeding expectations of 61 cents per share. The company has outperformed consensus EPS projections 4 times in the last 4 quarters. Because of the earlier delivery data released, analysts had a very clear notion of what to expect in terms of revenue prior to the results call. While projections from the financial estimate crowdsourcing website point to a higher revenue of $22.370 billion, Wall Street is projecting a quarter's worth of revenue of $22.005 billion. Because of the record deliveries for Q3, this would be a record quarter for revenue. The Wall Street estimate for 2022 earnings is a $1 per share gain, whereas Estimise predicts a $1.11 per share profit. Despite recovering from supply chain issues and the COVID-19 production setback in China that hampered first half sales, Tesla delivered a record number of vehicles in the third quarter, although this was significantly less than Wall Street's projected 359,162 units. According to Tesla, there are more logistical concerns at play here than any problems with manufacturing or demand. While Tesla made its customary effort at the end of the quarter to maximize deliveries, the company also acknowledged that it is getting more and harder to find affordable car transportation during these weeks of high demand. At the conclusion of the quarter, there were more cars in transit than typical, so they won't be formally counted as delivered until the fourth quarter. Elon Musk, the CEO of Tesla, stated that he was trying to even out deliveries every quarter in order to localize manufacturing and reduce expediting expenses in order to prevent the customary end of quarter rush. As of right now, Wall Street thinks Tesla can deliver 436,427 cars in the last 3 months of 2022. Although it has decreased from the last quarter's miss, that would still be a new record and up more than 40% from the previous year. If that happens, Tesla would likely produce 1.35 million vehicles in 2022, up 45% from 2021, but that will still fall short of the company's goal of increasing yearly output by roughly 50%. Present estimates place Tesla's 2023 delivery total at 1.99 million cars, which is remarkable but falls short of the company's 50% growth goal. Following the update, Morgan Stanley was one of the companies who reduced its delivery expectations. Its prior estimate of 1.37 million automobiles was revised to 1.31 million cars in 2022 by the manufacturer of electric vehicles. Additionally, it lowered its projected number of cars for 2023 from 2 million to 1.8 million. Right now, record numbers of Tesla vehicles are being produced at the company's factories in Shanghai and Fremont, the latter of which just saw an upgrade that doubled the plant's yearly capacity. The company's first location in Europe was a new facility built in Berlin, Germany back in March. Its second plant in Europe debuted in Austin, Texas in April. Investors will want to see progress at both locations, given the ramp up at the new facilities has been difficult and they have already burned through billions of dollars in funding this year. Not all of the focus is on supply, as worries about demand are beginning to surface. For the time being, though, Tesla is still collecting orders more quickly than it can fill them. Earlier this month, Wells Fargo reduced its target price for the company from $280 to $230, citing growing concerns about underlying demand, particularly in China, in light of the third quarter's delivery failure. In the upcoming years, Tesla's dominant position in the market will be put to the test by competition from established manufacturers and startups. As of right now, Tesla continues to be the industry leader, accounting for almost 2/3 of the U.S. market for electric vehicles in the second quarter of 2022. Elon Musk, the CEO of Tesla, doesn't seem alarmed despite anything. He mentioned the Dammam-based national oil company when he stated, "I see a potential path for Tesla to be worth more than Apple," and Saudi Aramco combined during the most recent Q3 earnings call. I had never recognized such possibility before. By the way, I should clarify that I did not include Optimus when I stated that I see a road Musk went on. The Tesla board of directors feels the company could easily handle a buyback, regardless of the business environment. The board has been discussing the merits of recent demands for a buyback in the worst-case situation for next year. We may very well undertake a buyback of between $5 and $10 billion. Musk stated, "Even if it's a very challenging year, we're probably going to do some significant buyback." It should be mentioned that numerous investors have expressed time and time again their opinion that Tesla ought to repurchase its stock. Musk is certain that the corporation will reach a $4.5 trillion market valuation even before accounting for the robot he believes would completely transform the industry. Following the release of Q3 financial data, analysts discussed their opinions of Tesla shares. Analyst Seth Goldstein of Morningstar Equity says, "We reduce our fair share value estimate to $250 per share from $255 after incorporating Tesla's preliminary third quarter deliveries into our model. We haven't updated our narrow Moat ranking. The decrease results from our prediction of fewer vehicle deliveries in the near future than we had before anticipated. Initial third quarter deliveries for Tesla were 343,830, according to the company, is at a record high. According to Reuters, Tesla plans to build about 495,000 cars in the upcoming quarter. This would place Tesla's annual delivery total slightly over 1.42 million, which is less than the 1.49 million we had previously predicted." Goldstein nevertheless stated, "We don't see any long-term problems that would interfere with manufacturing. Apart from that, the main thing we learned at Tesla's AI Day was that the firm is still developing its autonomous technologies. The company's achievements in the year since its first AI Day in August of last year were mainly on display during this year's event. We believe the Level 3 version of the company's autonomous driving software could be prepared for subscription sales in the upcoming years as it continues to advance." Wallet Investors' 2022 Tesla stock estimate places the company's possible closing price on October 20th, 2022 at $256.70. The stock was predicted by the algorithm-based forecasting service to go in the direction of $361.82 by the end of 2023 and $470.82 by the end of 2023 and $470.99 by the end of 2024. The 12-month average price target for Tesla stock was $275.68. Analysts' highest and lowest estimates for Tesla shares were $526.67 and $33.33, respectively. According to analyst predictions for Tesla stock, the crucial support level at $207 has been held once more, and if the company breaks lower, that level will become crucial. After there, it's probably going to test $160, the 200-week moving average, and the lower end of the trend support. Relative Strength Index RSI and Stochastic both display a slight oversold indication, according to analysts. Tesla can test $254 very shortly if it holds $207, as short covering and trend following will drive the price higher. To find out the precise performance of Tesla stock, visit Moat. Link in bio. It's crucial to keep in mind that analysts and algorithm-based forecast predictions can be off when examining Tesla stock projections. Predicated on a historical review of Tesla's share price, they are predicated on the idea that previous performance does not guarantee future performance. To see more videos like this, subscribe to this channel.